right, everybody, welcome. We're going to wait about a minute here as people are filtering into the room. For those of you who don't know me that are already on, my name is David Hansel, and I'm one of the managing partners at Lucern Capital. I'll do an intro of our guest in just a minute here, and we'll get started right now. There you go. Welcome. And again, my name is David Hansel. I am one of the managing partners at Lucern Capital. We're a real estate private equity firm based out of Red Bank, New Jersey. We primarily invest in multi and industrial assets with a heavy concentration in the Carolinas. I'm really excited to be joined today by Stephen Reisler, someone who's become a friend and also a business associate of our company. He oversees all of our insurance needs. He is with Alliant, has been in the insurance industry since 2002, and a major part of his practice is commercial real estate. And he's going to peel back some of the layers of the onion and talk about why and how it's important and what's going on in the industry. I know insurance for many doesn't seem like an exciting topic, but it's super important, and the details matter. And so having really reliable source like Steve is important to your investment career. And obviously, if you're owning your own properties, you'll need to make sure that you have the proper coverage. So this seminar is called Three Questions, 20 Minutes, and One Guest. So we're going to hit Steve up with 3 questions, and we should take up no more than 20 minutes of your time. But before we get into the questions, I just want to turn over to Steve to do a little formal introduction of yourself, both professionally and personally, and then we can dive in.
Sure. Thanks, Dave. I appreciate being included in the webinar here. And it's been a pleasure working with you and Frank and Steve over at Lucern on your properties on the multifamily side, and also with the industrial flex you've gotten involved with. I've been in the business about 20 years. Worked for Alliant insurance companies, privately held broker out of California, offices throughout the country. 8th largest broker, about $4 billion in revenue, and we do a ton of real estate, and that's kind of where I hang my hat. I enjoy real estate. I got into this business to help people out. I mean, that's really the main reason I got in, because a lot of people don't really understand insurance. So I like taking the time to make sure that they do understand. For the first 18 years that I've been in the business, it's been a rather normal market. But I wait to hear your questions to see how we can help with anybody who's listening to the webinar for sure.
Yeah, excellent. Well, thank you. And thanks again for joining. To that point, there's been a lot of changes going on in the insurance industry. Some will call it painful. Others may have other adjectives, but I wanted to ask you, what is the current state of the insurance market, and and I'm making the assumption, but why are premiums increasing so drastically?
That's a great question, Dave. I mean, it's kind of what's been going on. So I've been in business 20 years. The first 18 were rather soft. So the market's cyclical. You have soft markets, which means premiums are going down. A lot of carriers are, looking to write business. And as the cycle gets hard, it pulls back a little bit. It tightens up. Insurance companies decide that they don't want to write business. Premiums go up and capacity goes down. And that's kind of what's been going on the last 2 years. It's been hitting the property market the hardest. The habitational, very hard. Flex industrial, pretty hard as well. There's a lot of losses in insurance. That's what happens. And I mean, it's a pooling of risk. So these storms that have been coming through are getting stronger and stronger. I mean, they're averaging about $100 billion a year of losses. And what reinsurance carriers kind of dictate the rate structure. So you have the reinsurance up here, and you have the insurance companies to say, I'll name ones, Selective, Travelers, Hartford ones, they sit here. So they take on some of the risk, and then they reinsure the rest. And the reinsurance market got super hard for the last 2 years, and especially not this past January, but January 2023. That was the first reinsurance renewal after Hurricane Ian. And that kind of changed the map. The property market was a little hard before that, but it got super hard after Hurricane Ian and the reinsurance treaties that were just settled up on 1/1. And that's what's been affecting the premiums. The double dose of it is for insureds like yourself is the increased cost of construction. So people are getting double hit. So we call it TIV in the business, your total insured value. It could have been for habitation or flex. It doesn't matter. Say it was $10 million. The insurance company comes back and says, well, it needs to be $11 million. So right there, you have a 10% increase in your TIV. And then they have a 10% increase in their rate structure. And all of a sudden you're up 20%. And that's what's going on. The rate, I mean, to sum up this question, the rates were low for a real long time. As I said, I was in this 20 years, the first 18 years, rates were low. The market was soft. So if we have the rates are soft for so long and the losses are building up, it steamrolls. And then the total insured values, as these carriers go through these losses, they know what it costs to rebuild. And you tack on inflation on top of that, it really becomes a major issue. I mean, I said insurance was a line item that people always cared about, but now they're pissed off, pardon my French, because the premiums are going up so much and the options are so limited. It's not as scary as it was. I think going forward from here, the most of the reinsurance renewals are on 1/1 and they went rather smoothly, January 2024. I kind of see it being a bifurcated market going forward. I think that if accounts have losses and are older, they're going to fit in that one bucket. If accounts are newer and don't have losses and are being updated, they're going to get looked at more favorably. So I think that's really what's happening. And a lot of insurance companies are non-renewing, and that really causes a pickle as well. So you have insurance companies that are pulling out of markets, especially New Jersey. On the habitational side, they're just pulling out of the marketplace. So when they pull out of the marketplace, the underwriter, so we're a broker, right? So we're in the middle. The underwriters get slammed. So, what I would encourage people on this call to really have a very strong relationship with their broker, but make sure that their broker has strong relationships with the insurance marketplace to get deals done, for their insurance, because that's what's happening. Is it's really the desks of the underwriters are stacked up, and when they're stacked up, they're so busy, they're totally cherry picking. They're cherry picking the best, and you can't blame them because they're getting the rates they want. So why would they want to put a quote out there for something that has a lot of losses, old, no updates, versus newer construction with no losses? So there's a lot of cherry picking going on, and I don't blame them, but really using your broker to leverage the relationships he has with the insurance companies that right in that space is pivotal for asset owners like yourself.
Yeah. I'm actually going to cheat a little because I have a follow-on question. So
Sure.
it might be 4 questions instead of 3, but you talk about carriers moving out of the space and there's being a limited supply and being choosy. I mean, are you seeing issues where assets are uninsurable and people cannot get insurance? Or
It's I have not been that situation, but I've definitely gotten quotes very late in the process, very late in the process, the day of, um, because insurance companies know they have you, and it's tough, and the tables are going to change, but right now as I said, at the peak of the hard market, I think is behind us, but
yeah,
that's a great question. I mean, I haven't had that happen, but I'm sure it does happen.
sure.
Yeah, because it all depends on what the risk is. It really does. It boils down to that situation. If you have newer construction and no losses, you're going to find a home.
Right.
That's not the problem. The problem is when you have a lot of losses and insurance companies start putting massive deductible structures on. That's what happens. So that's a great question, Dave. And I'll consider that 1A of the questions.
Sure. Yeah. So on that topic, I mean, obviously, as operators ourselves, insurance is a real issue and topic that we're constantly addressing. And as we're underwriting new deals, as a matter of fact, we just closed literally within the last hour on a new asset, an industrial portfolio, which, by the way, Stephen helped put the policy together for us. I'd encourage folks to go out early and really build these relationships with your broker like we have with Steven, because it's important to get out there, and because the market's a little tighter, to start off that process and make sure that your numbers and the quotes that you're getting reflect what your real cost will look like, or else you may be off on your projections. So moving right along in terms of risk, and how can operators improve the risk of an asset? Like, how can they look more attractive to the insurance companies, to not only get potentially better quotes, but be more attractive to a broader market of insurers?
I wish every asset owner asked me that question, because that's you basically dressing up and going to prom, right? So you really want to make sure that when you take pictures of the property, that everything looks good. As an asset owner, if I was going to buy an asset, I would want to get the loss history on that asset. And that's what helped with that, with the one we closed today. We were able to get 5 years of what we call loss history, and it was clean. So I show that to the underwriter, and it's industrial, which is more favorable than multifamily. And I got a quote, very quickly on that one, and for under budget. When Frank Forte reached out to me on it, I gave him a number, and I came in under that number. So that was a success story. But I really think, you really have to look at your asset through the lens of an underwriter. Are you treating your property proactively or as a maintenance project? Because that's what happens. Insurance is not maintenance. It's not. And if you're proactively doing your roofs, right? So you have older roofs, you want to put newer roofs on. You want to make sure you don't have any aluminum wiring. Stab lock boxes are a big one. Carriers are asking these questions on the electrical more now than they ever have.
Yeah.
And that's a big deal. And I encourage all asset owners to walk their properties. Walk your property, because you don't want people to slip and fall on your property, whether it's industrial or it's habitational. You don't want to have lawsuits coming in. So walk around, see if there's potholes, right? See if there are trees pushing up sidewalks. I see this stuff all the time. And, it really, and you can take pictures of it. Like that's what I like to do when I go to market. I like to take pictures or show pictures of proactive steps that asset owners are doing to make their property safer. And also because insurance companies are not nonprofit organizations, right? They're there to make a profit, and they want to write the best risks and have the best return on their investment. And as an asset owner, you want to be able to show them you're not treating their policy as a maintenance, because maintenance doesn't respond. You know,
Right.
it doesn't, and that's kind of what happens. It's sad, but true. I mean, you really have to, you're either buying the asset yourself, or you're raising funds and buying it, on the behalf of your investors. So, it's just taking that extra step to make sure that the asset you're buying doesn't have a loss history like that, because, if you got a loss run and you showed it to me and I saw like 6 water damage and slip and falls. Those are the 2 big ones. So if you see a lot of water damage, every year those pipes get older, right? So if you see, and you're not ripping apart every wall and replacing every pipe. So water damage to me jumps off the page when I'm looking at loss runs, and it does the same thing for underwriters. And then with trip and falls is the same thing. So that's why I always request the loss runs when you're looking at an asset, because I want to be able to guide you whether it makes sense to stay in, or maybe it's just going to be a little more difficult to put the insurance in play.
Right. Okay, we're going to go for 2B. This is so interesting that I want to make sure we get questions out. So if you have old pipes or you have aluminum wiring and you're coming through walkthrough, and the numbers look attractive on it, you obviously your insurance bids are going to come in higher. But what can you do if you do have these issues at a property?
I mean, aluminum wire, you
Pigtail.
want to, pigtailing is not the right method either. You want to couple them, is the preferred method. Or a lot of people just strip it all out and replace it with copper, but that's very expensive. So
Yeah.
it's tough. I mean, it's the older, you see them more in habitational,
Yes.
and
Yeah.
multifamily, you see more there than you do in industrial. I don't know. It's tough. You almost have to uh, I don't want to say lower your offer, but you got to factor that in because
Yeah.
the insurance is going to be more
Yeah.
expensive when
Well,
it
that's to my point that when we look at a deal and we're underwriting, we're calling you up early in the process because we're trying to get a bid. And I think go back to that, and I can't express enough how important it is to get these bids on it. Just like if you have a project that's going to need renovation, you want to get your GC out there to understand what the costs are to make sure that your bid is correct. You have to do the same thing with insurance. Like you can't treat it like an afterthought.
And
So
one more thing, Dave, I'm just jumping my head. When you're talking about contracts you have with contractors, you always want to make sure. I mean, there's not too much snow down in the Carolinas, but you want to make sure the contractors are holding the asset owner hold harmless, indemnifying you, and adding you as an additional insured on their policy. I see a lot of I see a lot of contracts sometimes that are written backwards, and it's like,
yeah.
please don't sign anything without running it by your insurance professional because insurance companies are going to ask for these contracts sometimes, and if they're written backwards, they don't want to take on the liability of the contractor. They want to offset
Right.
that back to the contractor. So
Yep. Good point. Very good point. All right. We got one last question and we got 4 minutes if we're sticking to the 20 minutes.
okay.
If you go over, that's all right. No one's going to get upset with you. So, what are some exclusions or endorsements put on insurance policies by carriers to look out for? And I could say, and maybe when you're talking about it, is like, make sure that when you're getting a policy that it has the coverages for things that you need. Like inevitably you could get a cheaper policy, but you're missing certain stuff. So if you can talk about all of that, that'd be
Yeah, there's
helpful.
no doubt. I mean, I see, I look at policies all day long, and I look for certain things. Oddly enough, what's come into play big time in the last 2 years is crime scores. They run more in habitational, but they're doing it in industrial as well, especially if you have like a city, it could be a strip mall where you're gonna have a lot of activity. Crime scores are coming in play. So when they see a high crime score, they want to exclude assault and battery, and they also want to exclude weapons. And sometimes they're tough to get off. I mean, I've had situations where I couldn't get them off because the crime score was so high. So that may be something they, even going back to question two, running a crime score of the area where you're looking to purchase could be a factor in making that purchase as well. So I'm going to throw that back into question
Yeah.
two, but it's for number three. It's definitely an issue. It's more and more now than ever has been. And as I said, for the first 18 years, underwriters were looking to write business. What can you do for me? What can you do? Give me something to write. Give me something to write. And the last 2 years, they're looking for reasons to say no. And running the crime score is something they all do. So I would be very wary to make sure that your policies, if you can, get rid of any weapons or assault and battery for sure.
Right. And as the many times the insurance policies are dictated by the lender that you're choosing to use. Um, and there may be things that they may not require that you're definitely going to want. Um, Although it may be far and few between, but for instance, there are things that you shouldn't give up just to save some extra dollars on a policy. Is there one or two things that you've seen people try to just waive or take off to save money that you thought was penny wise and dollar foolish?
Not really. I mean, it's a good question, but I haven't. I mean, it's more just sometimes it's dictated by the property. Like, here's another one really look out for is actual cash value on roofs,
Yeah,
ACV on roofs. That's basically taking the depreciation in, and you'd never want to have that on policy, if you can avoid it. Because if you have a roof that's 13, 14 years old, is probably still in pretty good shape. But
right.
if an insurance company says anything over 10 years, they're going to put actual cash value on it. You're going to get, 30, 40 cents on the dollar. And you really want to avoid that.
Yeah,
Um, and
yeah,
another one would be co-insurance on your policies. You never want to have co-insurance on your policies. I've talked to your team at length about that. You insure it to value and then get agreed value, and then it becomes a bucket of money either for that particular building, or if you get
sure.
blanket, it would be for all your buildings. But you definitely never want to have co-insurance. And I do see that on a lot of policies, and people
Yeah,
have no idea what it means.
right.
Yeah.
I'll I really appreciate it. We're perfectly on time here. Went through all that stuff. Again, I want to encourage everyone to build your own relationships with your insurance broker or carrier. It's very important for especially other operators like Lucern. It's a critical piece of our operation and always making sure that we're managing risk appropriately. Steve, thank you so much for joining us. And obviously, if you want to reach out to Steven, you can. How can they connect with you if they wanted to?
My cell is always the best bet. It's a 646-246-9859. Happy to help anybody out. And Dave, I really appreciate this. This has
Yeah,
been great. You've been a good friend for a long time, and I love working with the team. And
yeah.
always happy to help. And sometimes it's a difficult message to deliver, but it's unfortunate the state of the marketplace. So that's why we had this webinar.
All right. Well, awesome. And thanks again. I hope you enjoy the rest of what's left of the day. And thank you everyone for joining us. And we'll see you next month.
Take care. Thanks, Dave. Bye
Bye.
bye.